All right, today is Monday, February 13th. It's about 20 minutes to 3 p.m. Eastern. My name is Ted with the Crypto Flight Path. Our friend and esteemed colleague Josh is not able to make it today for this edition, but I'm gonna do a quick a quick video, or I'm doing a quick stream, a live stream right now. This will yield a video, obviously, but what I'll try to accomplish is just talk a little bit about what happened or what's been happening since um, we got the SEC enforcement actions last week against Kraken, and some new stuff coming down the pipe, and what equity markets are doing, and what crypto in general, the price action that we're seeing across the board looks like a bit of a wet blanket. So before we get started, just a reminder to please do your own research. If we talk about trades we're taking, just know that that's not financial advice. I'm not recommending anybody take a trade or not take a trade. You got to do your own research, and you got to understand what it is you're trying to accomplish, etc. Blah blah blah. So just do your own research. Be diligent and vigilant. Manage your risk. Manage your risk. Manage your risk. I said it a lot. There we go. So anyway, to kick us off, normally we would have Josh with us here, but circumstances have created the conditions where it's me flying solo today. So I'll just get right into what I think is stuff that would be interesting to share. So taking a look at what equities did today. So let's actually take a look at the calendar. So the economic calendar is your friend in trading land, in finance land. So Trading Economics is a website we really like to use, or at least I do. Nothing major coming down the pipe today. It looks like no major economic releases today, but the big one is tomorrow. So let's get down here to Tuesday the 14th, 8:30 a.m. Eastern. Excuse me, I'm going crazy here. Looks like we've got CPI. So the CPI print is going to be a market moving thing. And I think not just tomorrow, but in the anticipation, and we'll get into what markets are doing around this today. But this whole inflation thing has been really wreaking havoc. And what I'm trying to get down to is I think if we take a look at what core is supposed to looks like core inflation is the consensus is that it's going to come in a little bit less than what the previous print of 5.7%. So that's core, and then the broader inflation rate printed 6.5% last reading. It looks like consensus is 6.2, and we had Fed give the FOMC speech last week, talked about how he thought the disinflationary process was beginning, and you see that we've been printing lower and lower and lower. But it remains to be seen whether or not we're coming in any hotter in this CPI print. So in terms of what markets are doing today, looking at equities, it looks like some selling pressure came off, and perhaps it's just anyone, if you were short coming into this, let me look at that on a like better time frame here. Maybe this it's harder to see this one, but looking, looking at this near 13,000 level, pretty strong resistance, and we've been drifting back down the last few days. I think if you're positioned short, we're coming back into a support area where it's probably, and given the confluence of coming back into support and with the CPI print coming. Oh, the other thing, big deal this week, and I just realized I didn't pull this tweet up, but if you look at this other calendar we have, or excuse me, we'll go back to the Trading Economics calendar. You'll see we've got Fed Bowman was today at 8 a.m. So Fed speech number one. Let's go to tomorrow. We have, in addition to the CPI, we have Fed Logan, Fed Harker, Fed Williams. We have the oil numbers coming out as well. Let's go to Wednesday the 15th. Who else is going to be? We got the mortgage rates, the MBA numbers, retail sales coming down the pipe, New York State, Empire State Manufacturing Index. Let's see. If you're in Europe, Lagarde's going to speak. So another talking head that can rear its, pun intended, rear its ugly head in the context of what we're talking about. Man, I really wish I had gotten that. I wish I really, and Josh sent it to me, and actually, I'm going to take a moment and see if I could find it because this is worth showing. The I believe there's 8 Fed governors talking this week. It just never ends with these guys. It's not pleasant, but darn it, darn it, darn it, darn it. Tuesday, this guy Ted talking about. Anyway, forgive me. I didn't make note of this, but I think you're getting the point. So let's go to Thursday. We've got another ECB person talking. We've got Philly Fed on Thursday. Oh, here we go. Mester, another ECB. Bullard, Mester again, same day, twice. And then rounding out the week, we've got important. Oh, here's Barkin. So I think in total, I believe it's 8 times this week we're going to have Fed talking heads. So the the rise in interest rates putting a wet blanket on stocks and other risk assets has been the thing. And if we look at, for example, let's go to Dow futures. Uh, Coming into the beginning of this year, we've been basically trading sideways for a few months, and this idea of Wall Street and others from a positioning standpoint trying to figure out how to position in a higher, basically a low or no position opposite the way we've been positioning for the last decade when the low to no interest rate environment. How do you position? I mean, that's if I were still working at the fund, that would be the question. What rates are going to do, whatever the Fed says they're going to do, how do we position for that? So I think circling back around for today's price action in equities, a bit of a wet blanket coming off. There's no other like catalysts. I mean, forget what the financial media say, in my opinion. The obvious thing here is that people don't want to be short ahead of the move, or excuse me, they don't want to be short ahead of the CPI print and then all of the talking heads because it's just really easy to get chopped to pieces. So take another look at another calendar here. CryptoCraft has an excellent calendar, uh, just a little bit easier to read than the trading economics. Although I haven't really applied any filtering, so it's just as good information in my opinion. But you see, this is tells the same story, but another good resource to have. And then the other thing that we're tracking here is around the SEC enforcement action against Kraken for their staking product, and we've gotten a little bit of clarification around that. But I will transition over to some charts now, and we'll talk a little bit about like what the price action is doing, and we're looking at Ether USDT. And let's roll the videotape back. So on the first, we had FOMC. We raised 20. We got our expected 25 basis points in price. Looks like the selling pressure alleviated, and we got back up and poked through this the top of this wedge, and have been kind of drifting, consolidating around this, leading up to Powell giving his speech. And then we saw this take 5 minutes, look on Twitter. You can find all kinds of chart examples of people talking about this 1680 level in this particular chart being tested once, twice, 3 times, 4 times. And at this point, before we get over into this area, the some sentiment that I was able to pick up on, and the things that Josh and I were talking about, is that if this resistance level can get tested and break down effectively, that means price wants to go higher, and people will start positioning, covering shorts and putting on new longs, putting new money to work once we're outside of this indecision point. and we got a bit of a directional, we got a bit of an answer about which way the market was heading, and that's when the SEC rolled out its PR campaign against Kraken, and we saw price correct back down, touch the bottom of this wedge line, and then violate that level, and has since come back a little bit further. A little bit of a rally has since pulled back further. What you're looking at here, this risk reward bubble, is an active position that we're in. Again, do your own research. This is not trading or financial advice. Typically, you wouldn't position ahead of a big, or you may not have any interest in positioning ahead of such a major news event like the CPI numbers, but we're employing our risk management strategy. We sold this little push right up in here, and we're trading very small, so it's not. I don't lose any sleep at night knowing that my risk is managed and I'm willing to take the swing. Anyway, the point I was trying to get to is that if we zoom out just a hair, looking back to when price had started to, we were going sideways into the end of the year, and then we get into the beginning of the year and we start to move up. We get a nice definitive move higher, a little bit of consolidation distribution, nice move higher, really nice move higher, nice move. I mean, really, really moving. Okay. Looking at this now, this resistance zone up here becoming very well defined, and the catalyst in the market, or the market reacting to these catalysts around the SEC starting to take all this enforcement action, has basically said, okay, at this price, it's too much. So price is correcting, and I think what longer term, some others can validate this, but longer term, we're seeing some price correction coming in. I would argue that overall regulation is the thing that's going to give the clarity that lots of other fiduciary types and other money managers and people that today are prohibited from participating in these markets, once they get the regulatory clarity. Maybe another way to say that, once they're able to be free from the liability of recommending such things to their clients in large numbers, then we'll get much more monetary involvement, meaning money coming off the sidelines, getting involved, and giving people the ability to have exposure to spot Bitcoin or spot crypto, not just derivatives products like futures or anything else that the average person isn't gonna trade. But what I'm trying to get down to here is prices coming back a little bit. Let's look at Ethereum on a higher time frame. So we drew this blue line a couple days back, and that's a little wonky. It looks a little wonky because I drew this basically as this on the 9th, when the stuff was hitting the fan, in relatively short time frame. We had this big pullback to the wedge line here, and once that level was violated, that gave me the confidence that I needed to think on a short-term time frame. We've got all this air back down to this purple box. I mean, there's a lot of room to move back down and retest these levels. I mean, this very strong buying, let me put it this way: before we broke out of this range, so the third time was the charm. Resistance, 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 bam, we got out. We came back up and collected in this area up here, and we've talked on previous editions here, we've talked about how this area of value is not really how crazy is it that here we are, in the first part of the year, we're retesting a previously hotly contested area that ended up failing when we had a different type of catalyst. The failure of FTX and all that horse pucky sent everyone into a tailspin. We've since recovered that, but now we have a different type of catalyst that's driving price action. Anyway, the point I'm trying to get to is that as price violated this line here, it was the right type of setup based on the strategy that I have developed over the years, to think in a short-term time frame that price needs to correct, and we can sell this move and target price. Our target is down in the basically in the 1250 to 1230 range. So looking at the chart, 12 12 fifth, yeah. So when I look back in time, I think what's the middle of this like ascending or this wedge that you could draw here, right about the 1240, 1230. I think it's entirely possible that with all of this regulatory enforcement action coming from the SEC and how horribly misunderstood it might be at large, uh, that from a positioning standpoint, if the price is going to correct in the short term, then as a trade from a trading standpoint, you position to capture where the chart is going, not where you want it to go. And so until this thesis gets this micro thesis, I'll call it, gets invalidated, I think that we could pull back into this range and chop a little bit, test this area for some like heavy duty support. But even so, I think it's entirely possible that depending on how long this regulatory stuff, this wet blanket from an SEC enforcement action perspective keeps up, we could see price come down and retest this level and even come back down and touch this lower wedge line. And I'll zoom out for a second to put it in perspective. I don't think it's like out of the question at all, given the range of these, like the range that we're covering, like in terms of price. I mean, at the low back in June of last year, we were sub 1,000 for Ethereum, and then we were up in the 2,000, and we've come back down and test these lower ends of this range one, two, basically three more times since it was up here, getting quite handily and firmly rejected at 2,000. So I think it's entirely possible that the setup long term, excuse me, the setup in the short term, I should say, is could come back down. Now, if all of a sudden, so what's the counterpoint to this? I think if magically we get some sort of like newfound regulatory clarity that, oh, the SEC Gensler gets on Twitter with a nice video about stakes again and talks about how, oh, well, what we're trying to do is X, Y, and Z, and here's why A, B, and C are happening. And then all of a sudden everyone gets this newfound clarity around what this enforcement action really looks like and gets over the initial panic that stablecoins are being outlawed or something's being banned and staking. What's that? I mean, this is really confusing stuff for a lot of people, this idea of staking, and when people are confused about things, they behave a certain way. And I think that, just to say it again, I think it's likely and certainly plausible that price comes back down and retests this level, as long as the the pressure from the regulatory end is still there. And I think that the market will trade that way in the short term. Let's take a look at another position that we have on Sushi. Uh, we can see that Sushi USDT, back since, yeah, since basically the beginning of the year, this has had a pretty strong move. I mean, we deviated from, once price rose this high and then came back and tested this, 120 level, and we were able to draw this trend line, or this upward blue line. It came back and retested that. We got a pretty strong move. And in a previous iteration of this live stream, we talked about how we tried to sell it here and got stopped on this move higher. But you can see it's a bit of a head fake. We've since pulled back, tested this level again, got rejected twice, and then we saw what happened here last week. And the rationale for being short at this particular level was that we had this big move lower, and then when basically sell the rally. And we're still short here. Risk is managed. We're only risking our X number of basis points of our account value. So if this does go, I'll say it again, if all of a sudden there's this regulatory sunshine and roses comes out, and everyone decides that it's risk on again, then and we don't need this correction anymore, then we'll get probably get stopped. If it continues, we're looking for this to come back down and collect. The rationale for drawing the risk reward box this way was that in this 2.2 to 1 risk reward trade short is that this from January 23rd until, sorry, I've read that wrong. From Monday the 9th of January 23, sorry, it's not the 23rd, it's Monday the 9th, all the way until Friday the 13th, we had this sideways chop. I mean, there was no direction here. So this was a pretty hotly contested area of value, and that to me stands out. I look for this. We got a pretty clear definition of that this was a support level here, and it set up this move higher. And you could almost argue that this box, and if I'll draw it real quick. Yeah. So you look at this area. This used to be a pretty good support. How many times did this? So it was resistance, got support, didn't need to support there, got clarity here, and this set up a nice move higher. But if you longed it up here, you're probably feeling some pain back here. I think since we violated this blue line, this level got violated, I think it now becomes a resistance level. I'll draw this line out a little bit further now. And what I think could happen is that if we get some conflicting information in the news about like what the SEC is really doing and how it benefits consumers and how it's not a bad thing, we may see this become a battle for this area here. If we get rejected again, then I think price will have to correct a little bit to get people to continue to get interested again. Looking at it on a little bit higher time frame, one thing that really stood out to me was that back watching this move, really it was this really defining move back down into this congested area. A little bit of a rally, entered the trade on Sunday, which was yesterday, and it's working for now. And it'll work until it doesn't. We'll get stopped with our 1 unit of risk, or we'll ride this down and take some profit here, if not exit. Let's move on to another trade that we're in that is just slightly not working, but APT Aptos. On this particular time frame, we saw a pretty good move up and got rejected at this basically $20.30 level. So basically 20.50. Two very, I'll call them strong rejections. And then we pulled back, retested the mid-range here, which is the Fibonacci retracement that we drew in this box. Was kind of showing we should have stayed short, but we caught this move back down to about 1670, 1660. So not a bad trade, and but it has since pulled back, rallied a little bit, really kind of moved back down into this area here. The rationale is that this seems to be a channel that's developing to the downside. So we'll see what happens, but I think that we're still RSI is still in the 40s. Until this gets terribly oversold, then I think price is going to correct back down probably to this level, the 1180s. Basically if $12 can't hold, then we have a good shot. And I think the real trade area probably got a little too exuberant, a little too excited and in too early. But I mean, gosh, isn't that what trading is all about? If this $12 can't hold, then I think that it's quite reasonable to think that we'll look for support back in the $7.80 to $8 range. And again, drawing this out, the rationale is if this area can't hold, and I'll talk about the other side, the flip of this. If this can't hold and it breaks down, we've got a little bit of air here. There's a bit of a gap. I think this would become the next support level. Again, just hypothesis. Now here's another way to look at this though. If we get a bunch of other nastiness in the media, oh, Gensler's going to do this, so-and-so hates that, President Biden's going to sign an executive order that does some things that on the surface are terrible, but are actually probably not bad, then and something like an Aptos or another instrument like goes sideways or starts to gain some momentum, we would flip our bias to say, like, in the midst of all of this headwind, we've got some serious strength here, then we would consider flipping our bias. But until we get some sort of validation or more like data that suggests that that's possible, we'll continue to keep our bias here. And then the other, Solana, interesting. Uh, we saw like some really interesting price action here. This area back at the beginning of the year, a little bit sideways until, see, from the 4th until the 8th. This is a 4-hour chart. So this very interesting consolidation, and then like very definitive strong move, collecting another strong move, support, and then we drew this line as these levels were getting tested. We saw this wedge develop. Interesting thing that happened though is that we broke down out of that below that line, came back and retested this support level. Definitely sold the low on this candle, but even though we had this move up, so what hindsight is always 2020, this would have been a good rally to sell and then consider taking profit back into this area where now it looks like it's developing some support. So we're still short, but we're probably wrong, but we're willing to let it play out. So I think that if, just hearkening back to what I was sharing moments ago in terms of looking for strength in the face of massive headwinds, if Solana is really as strong as it probably can be, then it will continue to trade sideways, and we'll make a decision about taking the leveraging or taking the trade off and at a whatever the small loss might be, and redeploying that capital either long or in another trade. But we'll see. It just depends on how people, based on how they're positioned now, they react to the CPI numbers, and then we've got a long week ahead of us with all these Fed talking heads. So I think that the bias is still intact. I think if we can't, I'll say it this way: if we're looking at the chart here and we get another push up, if we can't clear this area, basically 22 to 22, 20, basically 22 and a quarter. If we can't get back up above that, then we'll see it come back down. And if this breaks down, then I think we have some room to run back down to this like 1650 to 17 range, just in terms of filling the gap. I think that's entirely possible given the setup, unless it's all a psyop and a big head fake, and we're all being set up to be or have our trading accounts just completely drained. I don't think that's the case. We'll take a look at a couple of other charts, trades that I didn't take, but definitely missed. But I think the most important thing to remember is that it doesn't matter if you miss. There's always another opportunity. I just didn't take these because I didn't have the clarity and the conviction to take the swing at the time, which it's more important to sit on your hands and stay solvent and keep the trading capital that you have, in my humble opinion, than to just willy-nilly throw a trade on. Sometimes, and the reality is that sometimes you'll be right and you'll win, and so, other times you'll be terribly wrong, and I've done this. I've made all these mistakes. So I want to point out that it's possible that you put on a trade that you don't really think through and don't have all of the things that you need. Again, it's up to each person making the decisions when taking the trade. But the point I'm trying to get down to is that I sat this one out. And unless you have the clarity you need, then you shouldn't take action, and you should preserve your capital and look for better setups. What I was looking for here is we started over the last couple of weeks, we started to draw this wedge. It started to develop, and we were looking for this area, this resistance level to get violated, and boy, did it. And we had this big move up. I mean, big, maybe that's not the right way. This pretty strong move up that since corrected and came back down and tested this level here. So this resistance area became a support layer, or level, I should say, but then immediately with everything else came down, violated the lower end or the lower blue line here, collected, and What I was looking at but didn't have the conviction to go for was to sell this little move back up into this collection. And now remember, this is hindsight. It all looks magical. I should have sold it here. What probably would have happened is that I would have seen this and said, "Oh, it's about to roll over," and then I would have gotten short. I'm notorious for this, is selling the low and then watching it go against me, and then if it goes too far, I'll get stopped. But if I would have sold the low here, I would have set my stop right up around this red line, or back up somewhere in this area and taken a really really small position, and then from a risk reward, I would have probably drawn the box down into this area right here, and it may have not. But see, getting more than 1 to 1 is important, and I would say crucial in terms of setting up your managing your risk. But 2 to 1 is better. If you're going to be taking a swing, you want to have a good risk reward setup. I just didn't see it. That said, if I had let's hypothesize that I had sold this move right here, it definitely hit a resistance layer that I don't. It's not an accident. If you look at the wedge here, I drew this line a couple days back. What's today? The 13th. So a week ago, we drew this little blue line, and we kind of collected there, and it didn't violate this line. It didn't come back down and test this. We got this move, but it's right in the middle of this wedge. So interesting how that works. I don't make the rules. I just observe the funny lines on the chart. The point is that we had this move back lower. I may not have had the wherewithal to nail this. I rarely get the entry right, and really, you can argue that if the entries don't matter, it's the stops that keep you solvent that matter more than anything else. So this came back. It looks like it's catching a little bit of a bid here, but if this moves up and can't get back above this like 230 range and gets rejected effectively, I'll make this a little bit longer. So if it came back up and tested this and got rejected again, I might consider selling it, but I don't see it right now. What else can we look at in terms of charts? Oh, we can't ignore Bitcoin. So looking at the Bitcoin chart, this is a daily time frame. Interesting that we started the year back on, yeah, here we go. Here's the first of the year, and we had this really, really interesting range expansion, and we got all the way up to this 21,000 and some change level, and consolidated for a couple of days, and then had this nice move higher, and then we basically ground higher, and all the lines that the channels that formed up here were really interesting. And this is a 4-hour chart, and you can see that we consolidated here for a while, and then bang, they poked through, and this level got this upper range line got tested definitively, and then we had this move up, but we just couldn't get. We got to 24,000, but we just couldn't keep going, and so we drifted back and collected, and then you see what happened. Price is correcting here. What I didn't do is I didn't sell the low here, which I'm glad. And I'm a Bitcoin bull for the record. I'm a hodler in every sense. But when we're talking about trading the perpetual, I mean, we're just looking. We don't take possession of these. We put on a trade. We have to have an exit. So sorry, this little move, this little perk back up. Basically, we got rejected here, and we've come back. But it's not a huge move. I was sharing with Josh that I didn't sell Bitcoin here. I mean, I didn't short it on the futures because I felt like I would be chasing, or basically it was on this move lower here. I felt like I was looking at it here like, man, this really has the potential to come back down and test this level here. But you can see that if I had done that, I would have sold a low, and I would have set my stop way up here somewhere, just so that I gave it some room, small position or half position even, and tried to let it work itself out. I think it's not ready to puke just yet, but hey, it's only Monday and it's only 3:15 Eastern right now, so we got a long way to go. But I think if the Feds, excuse me, the Feds, if the CPI print surprises to the upside, then the rationale and the sentiment is going to be, oh crap, the Fed is going to have to react now because people are feeling the pinch. They're paying $8 for a dozen eggs or $9 for a gallon of milk. Gasoline is expensive, or is it? Or 64% of the population is living paycheck to paycheck. Oh, by the way, we're supposed to be having a recession this year. Amazon laid off 18,000. I mean, if you stay too engaged to the news or get too close to what's happening in the media, it makes it really difficult to not feel like a crazy person. But what I'm trying to get to here is I think, given this strong move back down to test support here, we got a little bit, we're moving sideways here for now. Depending on what happens, we may come back and test this level. If we really, really want to like make some people like sweat, then I would argue that if we can't hold in the 20, basically the 20 and a half thousand, 20,500 to 21,000, if it can't hold here and like perk through and reestablish that as a support level to dovetail with this consolidation or this collection of price action here before November of last year, then it has to go lower. And I would argue it comes back down into like the 20,000 range and maybe even 19. There's a lot of, remember, this is just me looking at charts. I don't have a crystal ball. If I did, I'd be on a yacht somewhere. But anyway, that's what I'm seeing. What other chart? There's another chart that would be interesting to look at. We looked at near. Let's look at render. Oh, yeah, render. Man, you talk about like we watched. I extended this line, the top blue line of this wedge. We drew this as this price started to collect in here, and we perked through, came back and tested, perked through again, and made this move up, and then pulled back pretty pretty handily. But what we're looking for here is the guy, what's his name on CNBC, is like, I want heaven or hell. It's like I want the price to go, or I want it to go much higher, or I want it to go much lower before I'm interested. So in this indecision, we got this pullback to this pretty well-defined support level. I mean, this was resistance. It got violated. It came back, became support, came support again. We saw this move up. This would have, hindsight, this would have been a great sell this little rally. We got rejected like in this congestion area, but it's only come back here to test the support. I would argue that I wouldn't be interested in, or what I am interested in seeing is that if this can remain in this zone right here, come up and if it got rejected here and the market's saying we're not ready to go higher, then we might consider taking this short back down into this area right here. So to put a bow on this one, like if we can't keep it together, render. If you can't keep it together, render, and get back up over this and reestablish this as a support level, then I imagine that we test this area and then drift back down, depending on what happens this week and any other things that are considered headwinds for adoption of crypto assets may continue to cause these prices to correct back down. And I just think render has the chance to come back down to this area. So one last thing to look at is the dollar index. Interesting 3 days starting on last week. We had this move back up. We'll see what happens. If the Fed is going to be seen to be more dovish, then I think we probably correct a little bit back. We settle back. But if we get all this hawkishness talking about interest rates have to go higher because we have to protect the American consumer from inflation, et cetera, then we may see people de-risking and getting into dollars. I don't know. We'll see. But that's kind of what I have. That's what I have to share today, this Monday, before we get going crazy with all of this talking head madness coming down the pipe. Two other things to point out. I wanted to share that this fine gentleman by the name of Andrew Kang, that I don't know personally and have never met, but follow on Twitter. There was a piece that the old Nick Carter on Twitter talked about. the current administration is trying to, in no uncertain terms, ban crypto or make it very difficult for this industry to operate in legally. And you can read all about that. I suggest you take a look at what Nick Carter published and make your own determination. But Andrew Kang talks about the headwind here. A scope and impact of the government's war against crypto could be more severe. Take this with a grain of salt, please. He's talking about headline risk in the next couple of days and weeks, and something I shared with Josh offline was that what I'm looking for here is to be cognizant of things that will be considered the wet blankets, headwinds, anything that's going to get in the way of price appreciating because market participants feel like that today this particular asset is horribly undervalued. So of course I'm going to acquire it with the expectation that it's going to appreciate in price. And then I do like the last part of this statement or this sentence here. It says, "As with all negative events, there will be an opportunity to buy blood." And the saying is that if you should be buying when there's blood in the streets, even if it's your own blood. There's some like very wealthy investor type Wall Street guy. I forget his name. You can Google that whole. Google some iteration or some like configuration of those words about like buying when there's blood in the street, even if it's your own blood. You can look that up. That's an interesting thing to me. I think the most important takeaway is that it doesn't matter how bullish we are on Bitcoin, especially if the governing bodies, the federal government are making it difficult for people to follow the rules, and the SEC, or for example, and there's all of this enforcement action. It's very easy for people to get spooked still because of how early how early we are, and as a lot of people say, with this whole idea of like the future of money. And anyway, that's one. And then another I wanted to point out here, this other fine gentleman I've never met, the old Wick, John Wick. This chart that we're looking at here is a visual representation of an indicator that they sell. But I think what's interesting, purely from a trading standpoint, is that this person was able to develop, or given some rules. You should probably have some rules if you're going to be trading, things that you're willing to do, things you're willing not to do, etc. Basically, we watched price move the way it did all the way up into this zone with this 24,000 getting tested a couple times, and this person was trading the move and subsequently exited their position. As much as I was ready to buy more, quite frankly, at 24,000, anticipating that if we could get through this congestion and have a nice move, a definitive move higher. And I'll go back over to the chart for a second. Back over here, as price was buttoned up against this 24,000 level, I was looking for a really defined move that poked through, maybe even hit 25,000, came back and retested the 24. Is it support? Is it not? It was not, narrator says. It was not support. It turned out to be resistance. And then we've had our other factors here. But moving back over to the John Wick chart here, is that talks about he got out and he took his profit. So interpret this however you want. I just wanted to show you a different visual representation of what some other market participants are looking at. And I would encourage you to find something that works for you, that gives you the confidence that you need to make some decisions around like where to help you at the end of the day. It's all about positioning. It's not about being right. If you're trading and you want to make an income out of it, it's about making money, not being right. And the market doesn't care if you win or lose, but what you probably care about if you're a participant is, did I make money? And if I didn't make money, did I only lose did I only lose the money that I could afford to lose so that I can stay in the game and stay solvent? So I think let's see, we're up on 45 minutes. There isn't a whole lot else going on this end today, as far as like news and other catalysts. We looked at charts, we talked about some of the trades that we have on and how much risk we're taking, 1 unit of risk, which we determined ahead of time. Last thing to look at, the SHIB SHIB chart. Man, talk about looking for strength. The saying is you buy strength and sell weakness. Uh, Going back to the 18th of January, we started to trade and consolidate into this area here, and we're able to draw this. Like we had these higher lows that started to set up, and man, you talk about a great setup to like really get confirmation that the market wanted to move higher. This would have been a great signal, in my humble opinion, to really like long the heck out of this thing. However, we know better that sometimes we don't get everything we want. If you had the proper risk in place and you were able to take some profit on these pullbacks, you might have decided that on a 50% pullback from this high, you were going to take some profit off and then let the rest ride. If you didn't, then you might have either gotten stopped at break even, or for your 1 unit of loss risk, the risk you're willing to take or how much you're willing to lose. But what I think is interesting is that this chart, we saw the move, we've seen the price come back and definitively test this lower region. We had a move up, we've corrected a little bit, another higher high, and then another higher low. Interesting to me that this hasn't pulled back even further. So I would say that that's, relatively speaking, now I'm not a Shiba bull or anything like that, but I think after watching this thing for a while do its thing, this is pretty interesting price action, given all of the things that we just spent 45 minutes talking about that are influencing pricing and inducing some price corrections in other markets, or other charts, I should say. So I would argue that if unless we violate the blue line here and we poke through this, then this is setting up to move higher. That is about all I think I know how I can, or all I'm able to communicate about this right now is I'm expecting this to break down, and it hasn't. So I wouldn't be interested in selling it until it broke down. And if it continues to not break down, given what we're likely to experience this week, again, who knows, then I think it might be an interesting long, but remains to be seen. So remember, boys and girls, this trading thing can be a wild beast, and I urge you to be vigilant and be diligent. Only risk money that you're comfortable losing. But something that Josh likes to say, manage your counterparty risk as well. If you're using an exchange, I mean, didn't I hope that the entire universe was paying attention when FTX went belly up. I don't think anybody thought that it would ever be possible for someone like an FTX to go belly up. But if you're working with an offshore entity, I'm in the United States, so the exchanges in the United States, they tend to be they tend to have to adhere to and abide by a different set of rules. So there's a lot of regulatory scrutiny and oversight. If they're publicly traded, and love or hate Coinbase, they're publicly traded. They spend millions and millions of dollars just submitting paperwork to the government to make sure that, so somebody knows that they're following the rules. And there's a lot of scrutiny, and there's audits, and there's all kinds of stuff that is supposed to keep them honest. So from a probability standpoint, you're less likely to get in trouble whether you like them or not. You're less likely to get in trouble with them disappearing for no really good reason than if you're using some offshore entity. So I'm just saying, please be cognizant of counterparty risk, and just remember, we're here to help. If you have questions, if you're watching this on YouTube, put them in the comments below. Anyone who tuned into the live stream, thank you very much. I hope this was helpful, and we will see you in the next one. And we'll do this again tomorrow on Tuesday. when the CPI number hits and watch the market action play out. Until then, have a good day.